So this week has been a rather volatile one for cryptocurrency. And those of you who don't have the appetite for risk, well, you sure would have had indigestion this week, seeing the way Bitcoin went down from a peak of around $64,000 for a Bitcoin. It went down all the way to about $31,000. But now it's back up to around $40,000 or so. And all of those of you out there who hodled it or held on for dear life, as you call it, well, there's still more for you in store. To talk more about the volatility in cryptocurrencies, we have with us an expert on cryptocurrencies, Mr. Atul Chatur. You've seen the way Bitcoin has been behaving this week. So, how do you read into it when we call it a store of value? Is it still a store of value?
Right. So, I would want to start my sort of inputs or insights on based on one sort of track record, right? So, if you look at the historic returns of Bitcoin, and then we'll look at a shorter time frame, the last year. So, Bitcoin has given over the last about 12 years, 2009 till date, a 200% CAGR. So that's like an annual growth rate of 200% every year. So that's from a long-term perspective. If you look at short-term, obviously last March compared to today, it's still up at a 40K sort of a price, about 8x, right? I mean, if I take a dip of $5,000, it was actually $4,000. So that's still about 10x over the last 1 year. So there is nothing drastically wrong. I don't think we are into a bear market yet. We are still in a bull market is what I believe. So based on my own technical analysis, plus what I am seeing in the investment world as well, I think we are still in a bull market overall, which will continue for some time. Also, it's very different from the last cycle where this was mostly, Bitcoin was always a retail phenomenon, right? This cycle, institutions are involved. And the moment institutions see a big opportunity, see a dip like this, I mean, almost a 50% dip, if Bitcoin sort of rebounds from these levels, you're looking at least what a 50% return even from here. So if you bought the dip, if you get caught in at about 31, 32, and we get back to about 65, that's like 100% in like a week or 2 or 3, right? So, I mean, my view is that while there is a dip, for sure, it's like a 50% dip. These kind of things have happened in last cycles as well. So if you look at the chart for the last cycle, there were about 2 40% dips and about 4 30% dips, right? So crypto is very volatile, that's a given. And hence I'm not too worried about this dip. Having said that, let's see how things go. You know, I'm tracking it closely to see what happens next. But I'm not too worried about the dip.
Yeah. So is this a good time then for those who haven't gotten into crypto so far, always, sitting on the fence, to actually take the plunge and get into crypto now, especially since Bitcoin is probably one of the largest cryptocurrencies out there, the bellwether cryptocurrency?
Right. So I would say this, right? So if you have a long-term view, don't be worried. And by long-term, I mean a 5-year view. And if you had bought Bitcoin 5 years back, so I got in 2017, so it's not exactly 5, it's 4, but I got in at $3,000, and I am sitting on easily at 20x, right? If I look at 60K, I have sold at about 55K. So if you're looking at something like that, I mean, there's a clear track record for you, right? I mean, you get in at these levels, and in about 5 years, you're probably sitting on at least 5x, if not 10x sort of returns, And I am basing this both on the historical track record, also in terms of the sort of very well-known supply-demand economics out there, right? I mean, if I look at the supply, it's capped. It's reducing because 18.4 million Bitcoin have already been mined. There's just about 2.6 million Bitcoin that will be mined in the next 120 years. So there is going to be a massive supply crunch, whereas the fact that Bitcoin is now really very freely available to buy by anyone, right? So if you look at the fact that it's on the Square app, it's on Venmo, it's on PayPal, it's on Visa has integrated into Ethereum or the blockchain as well. There's just so many opportunities for people to buy worldwide. So retail is obviously in a big way in this cycle, but so are institutions, which is why I think we'll be lucky to sort of have Bitcoin at these levels in a month or 2. But right now it is looking a bit weak, if you may. So I think the next 1 or 2 weeks will be crucial. But after that, I think it will bounce back. So in terms of, I would say my views on should you get in now, I would think so, but don't get in with your full money. I would think deploy about 25%, see how it goes. So if you've got 100 rupees to invest, put in 25 rupees right now and see how it goes, because I think some weakness might persist over the next couple of weeks or so.
Yeah, that's interesting that you mentioned this, putting in just about 25% of the money in right now. So, in your view, what should one's investment portfolio look like if I had that 100 rupees, 25% if I put into crypto? 2 points here. One, in crypto, also, what are the kind of things I should be looking at? Tokens or cryptos like Bitcoin, Ethereum. That's one. And two, what should the rest of my portfolio consist of if I wanted a good investment portfolio?
All right. Okay. So I when I said 25%, I assume that you are going to put all of that money into, 100 rupees into crypto. But if you add 100 rupees, I would say your allocation should be max 10% into crypto, especially for people who are looking at this like a pure like a pure asset class, right? So you're invested in equities, bonds, gold, real estate, and you want to look at crypto. Crypto is a risky, a volatile asset class. So as I said, I don't think the prices will dip that much in this cycle because of the reasons I told you. The two reasons being, as I said, retail frenzy, a lot of retail buying, options as well. Coinbase, for example, has IPO'd in the US. There are plenty of crypto exchanges out there, institutions, large institutions, right? So in spite of Elon Musk saying whatever he did, Tesla has not sold any of its Bitcoin. It did sell 10%, but that was just to test out the market. So it doesn't matter what people say, they are not actually selling in a big way, right? I mean, whoever is selling is mostly retail individuals, people who got in at 60K, 55K, 50K, who are getting worried by this. But as I said, I really wouldn't worry too much. So to answer that question, I would say out of 100, put in 10 into crypto. If you're looking at portfolio diversification, if you're looking at getting exposure to an emerging technology based asset class, Google, Facebook about 15 years back. And I believe we have reached that stage because clearly Bitcoin is large enough, Ethereum is large enough. So people definitely need an exposure to this asset class. If you had asked me about a year back, I would have said, take about 2 to 3% exposure. Right now, I would say 10% right, because it's clearly out there. It's reached critical size as well, because Bitcoin was just about $1 trillion, not like, maybe last week. And right now it's slightly down. But I would say, out of 100, put in 10. And out of the 10, you deploy 25% of that. So about 2.5 rupees now, if you may, into crypto. In terms of what should the crypto basket look like, right? And again, this is don't take it at face value. This is just what I would do in terms of the coins that I like, the ones that I have done research on. And upfront, I want to say this is not financial advice. I want to be very clear on that. So
I would disclaimer on that, yes.
Own research, But I would say, Bitcoin, out of that 100, right? And I'm taking 100 rupees as the money that I invest completely in crypto. I would say 25% allocation to Bitcoin, 25% to Ethereum. And then the remainder 50% I would allocate to a bunch of what are called as altcoins. Now altcoins are probably even more volatile, but there are a few that are on my radar that I have invested in personally as well. And out of that, Matic is one. That's MATIC, Matic. It's actually an Indian company, or at least 3 of the founders are Indian. One is now based out of Europe. He's an European, so that's a very good investment. It's essentially an Ethereum scaling solution, and they've got a few other services or offerings up their sleeve as well. It's doing really well. It has gone up about 10x in the last about a month or so. But I think it'll do well going ahead as well. And it might see a bit of cooling off because it's already gone up 10x in the last about a month or so. So that's one. The other that I like is Helium. I think I mentioned it the last time as well. But Helium is one of the coins that I really like. It has got a fundamental underlying business model. They are growing very fast as well. And a couple of, another one is Rune, RUNE, which is also a 0 to 1 project. They're doing something incredibly innovative and different, which has never been done before in crypto. So I would say altcoins, yeah, those are the three leading ones, and then there's a bunch of smaller ones, but those are um, those are quite risky in the sense that these are really small. I am dabbling in them myself. I don't have large positions, but yeah, I would say the three largest and the ones that I am excited about are Matic, Rune, and Matic, Rune, and Helium, HNT.
Yeah.
But as I said, please do your own research. This is not financial advice. These are just the ones that I am investing in. So just wanted to be very clear on that.
Right. So thanks for the advice there. I'm sure our viewers will also do their own research before getting into cryptocurrency. Like I always say, this is a risky market, and you're doing so at your own peril, getting into any kind of investment market. That said, Atul, one more question was around: is crypto like a proxy for equities? Now, companies looking to raise money from the capital markets usually, list themselves, put their shares out there, people buy shares. Here, we are finding a lot of people coming up with their own tokens or their own coins and getting people to buy them. So, is this kind of an unregulated proxy for equities, in your view?
So there are various kind of coins or tokens as well, right? So I'll just go over a couple of them. Well, two or three of them, just so that you understand the difference. So for example, if I look at the top, let's say 5 coins, right? So if you look at Bitcoin, so Bitcoin is a token. It's used purely for payments. It's got limited use cases in that sense, because it's basically a store of value. You can use it for payments as well, but the payments use case is limited because it's very volatile in terms of price. If I look at Ethereum, which is number 2 today, that has got many use cases. It's also used as apart from the sort of store of value, it's used like a capital asset as well. It's also used as a gas fee mechanism. So if you build on top of the Ethereum network, it has its own programming language as well called Solidity. So if you build on top of the Bitcoin of the Ethereum network, for using that network, you need to pay the gas fees or the fees, if you may, in the Ethereum token. So it's a multi-purpose token as compared to what Bitcoin is. And then I go beyond that to a token called BNB, which is the Binance coin, which is more like a discount token. So if you actually go onto the Binance exchange and you trade, let's say, Bitcoin or Ethereum or whatever else using the BNB token, so the BTC BNB pair, if you may, you get a certain discount because you are using that token. And underlying that token is also the cash flows of Binance. So Binance, for example, every quarter, 20% of their profits they use to burn the BNB tokens. So that's like a deflationary policy, right? So what happens is, let's say in a quarter, Binance makes 100 crores worth of profit, 100 crore rupees. Out of that, 20 crores they will use to destroy or burn, as it's called, burn the tokens, the outstanding supply of the tokens. So if, let's say, 100 BNB tokens were there, they actually become 80, which increases the price, right? The entire purpose is to burn the existing tokens. It's a deflationary token policy. It increases the price of the BNB tokens. So that is essentially what is called as a discount token. It's also used on the Binance exchange for trading, etc. So those are just the three broad. So Helium, for example, is another one which is quite different. It's not like payments or anything. It's more of a reward token. You can mine with that as well. Whereas, for example, Ethereum is moving to proof of stake, so it's not mining. So I would say, yeah, there are different tokens out there. You just need to understand which token is for what. And while there aren't 100 different kind of tokens, there are definitely 4 or 5 different token categories, if you may, which you need to really study in detail. I mentioned 3 of them, but yeah, there's probably a couple of others which all fall in a slightly different basket. Now, to answer that question around, are these equity tokens? No, they aren't, right? I mean, if they see equity shares give you firstly an ownership in the company, and secondly, some claim over the cash flow as well, right? I mean, which is why equity shares you value on the basis of price earnings multiple, for example, right? So PE multiple is one of the things you use, because you look at the underlying earnings of an equity share and you say 10 times that or 20 times that or whatever it is what you are comfortable buying a equity share at. That's not true for tokens. Tokens are not used that way. They do not give you an ownership in the underlying company. So the underlying company is different, the token is different, but the tokens are used and are useful for certain use cases, which is where you derive the value from these use cases, whether it's a discount token, whether it's a payment token, whether it's something like a gas token, which is what Ethereum is. Of course, Ethereum has other features and value as well, but that is where the tokens get their value. They are not equity shares. There are certain tokens called as securities tokens. It's like an STO, securities token offering, but there are very few of those. So like hardly one or two, not even worth mentioning as of now. So STOs have been looked at to see if they could help raise capital globally, but there is no global capital raising jurisdiction as such, right? I mean, if I were a global company, so even Amazon is listed in the US, Infosys is in India, etc. You cannot have a global company listed that way. So there is something called, as I said, an STO, securities token offering, a security token, which is equivalent to an equity share, but they are very rare and not worth. There's hardly anything that I can recollect that I would say is equivalent to an equity share. So the important thing is these tokens are not equity shares, and there are a couple of them which are equivalent to equity shares but not worth mentioning. But as I said, tokens have different utility value, or the value that they derive is based on certain other things, as I mentioned. So it's either a payment token, it's like Ethereum, which is used to pay gas, or BNB, which is like a discount token on the Binance exchange.
But do you think if we had regulation in place already, do you think we would have seen such kind of volatility in the crypto market if there was a regulator? Do you think this needs to be regulated at this point?
Right. So here's something. I'm not sure. Obviously, I haven't covered it here, but if you look at the basic definition of crypto or Bitcoin, right? If I were to really define it at a basic level, it's essentially electronic peer-to-peer cash without an intermediate, right? So which basically means I can send cash or a Bitcoin from where I'm sitting here to wherever you're sitting, whether it's in Bandra, whether it's in New York, whether it's in London, doesn't matter, in like 2 minutes or 3 minutes, and no one is involved in between to really say whether I should do this or not. I don't need to take anyone's permission. It's like I push a button here, and the money gets deposited, or the Bitcoin gets deposited in your wallet wherever you're sitting across the world in exactly the same amount of time. So whether you're sitting right next to me or physically, or whether you're sitting in London or New York, doesn't really matter. Now, for an asset which is of this nature, where it is basically electronic peer-to-peer cash without an intermediary, where I don't need to depend or trust anyone. So it's like trustless, permissionless, even in that aspect. How do you regulate such a market? How do you do it? So the only way to regulate this is when I use my INR, my rupees, to buy Bitcoin. That's the only place where you can regulate it, saying, oh, you can't buy more than, let us say, 10 lakh rupees worth of Bitcoin. That's one sort of regulation that I see. But in terms of the broader volatility, if I can actually do this without taking anyone's permission, so I don't need permission to trade as such, as in execute the trade, then how do you stop it? It's not like a stock market where you can put a 10% circuit limit or a 20% circuit limit. You just can't do that because there is no intermediary in between to actually do that, right? And so volatility is actually a feature of the cryptocurrency market. You have to realize it's not a bug, it's actually a feature. And if you're not comfortable with this very concept of electronic peer-to-peer trading without an intermediary in a permissionless manner, then if you're thinking regulations are going to save you, they aren't, right? So that's the nature of the crypto markets. It's actually a feature and it's not a bug. If you don't like the feature, though, don't get involved in this, because markets can crash in a single day by 50%. They can go up in a single day by 500%, and there's no one out there to say that things shouldn't happen. So that's something that you have to realize.
Absolutely. Okay, thanks so much, Atul, for these insights. And as usual, it's been a pleasure having you with us. And to our investors out there, standard disclaimer applies. All the tokens and cryptocurrencies mentioned over here are Atul's views on it. Please do your own research before you get into the cryptocurrency market. And it is a volatile market, so do so at your own peril. Thank you for watching.